Good morning. Welcome to the morning market briefing. Today is Friday, March 6th, 2026. I hope you are doing well. Tom, quick just plug for our April 1st event with Jacob's Ladder. If you want to take the next 20 seconds, talk a little bit about what we're doing with them.
Yeah, so we're doing a lunch and learn on the 1st of April. We're having Amy Odell back, who was on our long form podcast, I guess 2 weeks ago now. Just kind of spreading the word about what they're doing, but they're a neurodevelopmental research center and school in Roswell, doing a lot of work with kids with, autism, behavioral issues, cerebral palsy, all kinds of different sort of childhood neurodevelopmental ailments. They're working on improving those outcomes for kids. So if you are interested in that, or you have somebody who would be interested in that, please let us know. Happy to have you out. But so far we've gotten a lot of buzz around it. So
if you are in education, healthcare, or fundraising, or you know people who are in that, or you're just interested, we'd love to speak with you. We'd love to introduce you to Amy, because they're really trying to ramp up more in those avenues and get a little bit more awareness. So anything we can do to help them out is something that we feel pretty passionate about. We also feel passionate about the markets, Tom, and I'm very interested to hear what is going on in the markets. Maybe we can see a live look at bonds, and then we'll backfill and tell you why the bonds might be doing what they're doing. Chris Waller, who was shortlisted for the Fed, who had been pretty dovish, as he was being looked at as potentially being a new chairman, he came out this morning and basically said, the labor market's doing all right, and we're a little bit concerned about inflation due to Iran. Maybe we shouldn't cut rates at the upcoming meeting or meetings. Tom, what are bonds doing?
Bonds are hot, at least as related to this morning. So. I mean, 5 minutes ago, the 10-year had worked its way up to about a 416, 417, which is about as high as we've been in the last couple of weeks. And we got the jobs report. It came out, and we have smashed back down to about a 411.
So famously, last jobs report, we wrote off about 1 million jobs created over the previous 12 months. And so there's a Pyrrhic victory with 135,000 jobs alleged to be created in the month of January. There were some seasonal issues there. It's a very revisioned month, just in terms of the seasonal adjustments that they make. Normal course has resumed, Tom. A loss of 92,000 before revisions today. Unemployment rises to 4.4%.
I mean, I think based on what I have seen with my own eyes, this might be one of the more accurate reports. We do a lot of poo-pooing of the jobs report and how accurate it's been because of those massive revisions. Call it all of the Biden jobs, and most of the ones that Trump has had since he got in office have been revised off. So whether or not we actually have added any jobs in the last 5 years is pretty suspect. But this one seems pretty in line with what we've seen. I mean, obviously on Monday's call, we talked about how Block, formerly Square, laid off, 4,000 people, which is roughly 40% of their workforce in a single day, rather than being like, hey, we're going to slowly do this over the next 5 years. We're just going to, drop the hammer and fire all these people. And
Oracle's ready to can 15% of their workforce. Maybe they'll get pink slips today or leading up to their earnings next week.
Yeah, so I'm kind of looking through the numbers here, but I mean, government jobs continue to be down. I can't hate that. I mean, it's just, I think they need to cut rates. I think we're too restrictive. I think it's 50 basis points. I'm sure that we've already seen a move on interest rate expectations for cuts, if I had to guess. If I look here now.
There are some, the BLS is talking about there were some strikes of doctors went on strike in the month of February, which frankly had in the air. I did not know that was going on. But that, swayed things to the tune of about, they were up 77,000 strangely in January, and they were down 28,000 in February. Doctors' offices lost 37,000 jobs. So even if you say kind of net, they should have been up 50,000 versus where they came in. We're still down 40,000 jobs in the month of February. Now, maybe March reverses some of this, and March number is going to be a little bit better, but it's not good. It's not good. And in the information sector, it continues to trend down. They lost 11,000 jobs. Again, 4,000 of those might have been from Block. Federal government continues to go down. Transportation and warehousing actually was down 11,000 despite some of the more positive news that we saw there, mostly due to couriers and messengers.
Messengers has got to be a weird job in the year 2026. I mean, it was replaced by instant messenger when I was in middle school.
Tom, what was the expectation on the participation rate?
Let's see, participation rate.
So is it 62 and a half? That's
62
what I have.
and a half, yeah. So
we came in at 62 flat. Guys, the unemployment rate is a function of the participation rate and the number of people working. So we came in at 4.4% on the unemployment rate with a participation rate that was 50 basis points lower than expected. So that's what we were taking 4.4% of. We were taking 4.4% of 62 rather than 4.4% of 62 and a half. You're talking about an unemployment rate that, assuming, and I can't do the math in my head like that, but I'm guessing, and I think these numbers are about certainly directionally correct. You're talking about a month-over-month increase in the unemployment rate, normalized for your participation rate, from about 4.3 last month
to 5,
to probably at least 4.7, 4.8.
Yeah. I still maintain that the unemployment rate calculation is absolute BS because the unemployment rate didn't change last month when they wiped off 1 million jobs. They didn't change the previous year when they wiped off 816,000 jobs. Somewhere there's unemployment, but somehow it's we add jobs according to these things, then we wipe them away, and then we say that the unemployment rate has not changed. And then we remove 0.5% of people across the board who are participating in the labor force, and that doesn't somehow end up so there are fewer people trying to get a job, so your denominator goes down, and then there are more people who are laid off because the jobs number is negative, and therefore you should see a very significant increase in the ultimate result of that calculation, and yet it's up 0.1% month over month. So I think that it's very strange. I will say that Ben and I were doing a little game of, what do we think the number is before it came out? I said it was going to come in at 8. Ben said negative 10,000. We were both off by quite a bit.
But we were still directionally a lot better then.
Yeah. The lowest expectation was Bank of America, who had an expectation of positive 35,000 jobs. And Brown Brothers Harriman, which is the ultimate white shoe Wall Street firm, said 60,000. So by the Price is Right rules, nobody wins. We're going to have to try again, but Brown Brothers is the worst. So just remember that.
What's interesting, too, is this BLS report also goes into the duration of unemployment. Generally, you like it when there are fewer people who are unemployed for a longer period of time. That increased by a whopping 86,000. That's pretty significant. That's about 5% increase in the number of people who are unemployed more than 6 months. 1.9 million people have been out of work for more than 6 months. Also, less than 5 weeks is up 153,000, which basically means Christmas came and went. January 1, they got their pink slips.
And they're still sitting on the couch.
And they're still sitting on the couch. So you might see this pig in a python scenario too. Right now you kind of have this U shape. We don't have very many people who are unemployed between 5 weeks and 6 months, but you might have that start shifting out. And the longer people are unemployed, the more skills atrophy, and that's where things become a little bit more dangerous.
And then when you have to start explaining your windows, your work windows, where they're like, how come you've been unemployed for so long? Which I think is the worst part about resume building is you have to, your gaps. Why do you have a gap? But they say it takes a month for every $10,000 of income that you want to find a new job. And so the tough part is, if you believe Michael Green, who's a sort of an economist and options guy who does a lot of tweeting, at Professor Plum 99, he argues that the poverty line is now $140,000 a year. So if you're going to meet the poverty line, in his mind, you got to be out of work 14 months before you can get a job that's worth taking. So that's not great.
I'm also just kind of looking through any of the internals. Are we seeing any reason for some sort of positivity, a little bit of light on a fairly dark day for unemployment. Not really. I mean, every kind of racial classification basically saw an increase in unemployment. You didn't really see any ages or education levels go down in unemployment. Less than a high school diploma increased the most, from 5.3 to 5.6%. And then pretty much every sector, and I'm looking through all of them except retail and utilities and financial activities, was down. But government, leisure, hospitality, healthcare, obviously, that we talked about, education, information, transportation, warehousing, construction, manufacturing, mining, all negative. A bad month. Anything on average hourly earnings, Tom, of note? Expectation was 3.7 year over year.
Came in at 3.8. Nothing major there. I will say that retail sales also out and better than expectations. Expectations was negative 0.3 month over month. We came in at negative 0.2.
That's a January number, though.
Yeah, it's dated, but it's still not great.
Yeah.
Indications. I mean, you're coming off December as well, which is the big one.
I think this all kind of goes back to what we've been talking about, is that you've got to provide value in this economy, and the bar just got a lot higher if you're an employed person in the United States. I remember when I was in high school and there was kind of all this talk about these emerging markets and them coming, and we're going to have to compete on a global stage now in order to in the workforce. And so you really have to outwork not just other Americans, but the Chinese. And before that, it was kind of the Japanese were really rising. And now it's AI. You have to be able to be more productive than AI. And so you can complain about it. You can look at it as a threat, or you leverage it as a tool and you figure out how you're going to be more 30% to 50% more productive this time next year. And we're actually talking about even having a lunch and learn. We're employing some tools to basically do things that we do manually, whether it's look at data, pull data, look at it from a dashboard, analyze where a bunch of kind of technical analysis on stocks. Things that we do that aren't really core to any value add that we do, but can really dramatically speed up that part of what we do, how we operate. And so we're implementing that live. I mean, we've got people next door who are doing that as we speak. And I think that it's incumbent, if you're in any profession right now, you got to figure out how you're going to be 30 to 50% more productive this time next year. Otherwise, AI is a threat to you.
Yeah. I mean, the assembly line was market corrected by Poka-yoke. You can look it up. But that's the efficient manufacturing ideology of Japan, which became you had to
Kaizen,
you had to become a Six Sigma black belt, and then you had to be a Scrum Master, and now we just have AI to do all of that. So all those people have market corrected, which is thankfully for me, I spent no time on any of those things. You just got to be dynamic, and that's really the hard part now. Is like, I mean, unless you're past a certain threshold of business acumen or skill, like you're just going to there's a gap there between being a young person and being a grizzled veteran. There's no time in business now to be spending money on people who are pretty good at stuff or learning stuff, because you can just get that from AI. And that's really, you have to be a person walking in day one who's a young person who can use that AI to put themselves at the same level. And that, I mean, I don't know how being a young person now has to be the worst thing in the world. You know, like,
I mean, it really hasn't. The idea hasn't changed. You've got to provide value, but the
landscape
the context
changed very
has.
quickly.
Yes.
Yeah. I mean, yeah,
you're fighting the same battle on a different planet.
Yeah. I mean, if you're a 25-year-old man, which is the worst time to be a man, because you have nothing, you have no swag, your car stinks, your apartment's terrible, but like you have no prospects now. And not only that, but you're actually a toxic human being by the virtue of being a man. So you can't even approach a woman without being jailed. So it's tough. It's a really tough time to be a young person, I think. It's miserable. What a miserable time.
It's got to think, how are you going to reinvent yourself?
Yeah.
In this,
you got to come up with a shtick, man. You got to have a shtick. You got to have an angle, and that the people who come up with an angle are going to get somewhere, and those who can't it's going to be a long road.
Oracle, we already talked about. They're really trying to save as much cash as they can to redeploy into these data centers. They're seeing the writing on the wall. They're saying, employees are less valuable than this strategic imperative of AI right now. And that's what they're saying. So in order to convince them not, you got to make sure that you demonstrate that you are uncontrovertibly better than what their incremental dollar spent on AI. Costco, they reported earnings last night. I mean, in the context of all of this, we're continuing to see an improving actual economic activity. So, we're seeing Costco that continues to have 6 to 7% sales. The baskets are getting bigger, which means that people are actually buying more when they go to Costco, or they're buying more expensive stuff. Inflation actually came down for them. So this is not just them buying the same stuff that it's just more expensive. It's consumers buying more stuff or mixing up to higher priced items. So gold, also helped, but I mean, even stripping out that, they did pretty well. So Costco, interesting barometer of the economy. Again, most of their consumers make over $100,000 a year. So they're kind of at the upper leg of that K, and as we talk about a K-shaped economy.
Or just below the poverty line, depending on who you ask.
Yeah. Iran. So I think this is definitely the story that continues to cause significant market gyration. So we have these geopolitical headlines, and then we have these underlying economic data that's coming out that's basically saying employment market remains weak, but the economic activity remains strong. But Iran definitely throwing a spanner in the works there. And we can show you a chart of oil prices and gasoline prices. And this is really the proximate cause. I mean, we've seen Brent oil go up over 30% in the last week and a half. Brent oil is the primary determinant of what our gasoline is based off of, especially here on the East Coast. That's going to hit gasoline prices. The blue line is gasoline prices. The white is Brent oil. I mean, these guys are in lockstep. That's a 25% increase in your gasoline prices at the pump in a week and a half. That's not good for political stability. That's not good for, continuing the duration of the war. And then now you have that initial cohesion of countries, including Qatar and UAE and Saudi Arabia, who begrudgingly, I would say, supported the U.S. and just wanted to get Iran finished. They are now saying, look, you got to finish this war, otherwise we're going to have to shut off all oil exports. I mean, Qatar just had their LNG export facility bombed by an Iranian drone. That's not going to be up anytime soon. So good thing we don't rely on natural gas. But we do rely on oil, and we do export a lot of oil, and we're net exporter, and so the U.S. is somewhat insulated. But I'm telling you, this is not good for Europe. It's not good for China. And at some point, that's not going to be good for the United States. I mean, we're seeing in gasoline prices, you fill up and you transport yourself. But now you're going to see it in airfares, and you're going to see it on the grocery store potentially as well, because freight prices are going up. So that's all the backdrop here. And the context is we've gone from days to weeks to 4 to 5 weeks. And now yesterday, Politico came out with a headline with a report saying that inside in the administration, they're talking about potentially 100 days through September.
I will say this is a tinfoil hat, but if there is a pipeline or a refinery that happens to catch fire in the next 2 months, I don't think it's an accident. I think back to like 2008 and things like that, where like oil prices would spike and then suddenly a refinery would catch fire in Louisiana or Texas and there would be no gas for weeks. And it made it real easy to get things like TARP through. I'm just saying, tinfoil hat. Something's going to happen with one of our refineries that is like, oh, it seemed like an accident, but I'm not certain that it will be. That's a deep cut. I remember when tinfoil hat theory. So
Indeed.
Just keep it on your radar. You heard it here first, folks.
We did mention a couple days ago that Scott Besson says, "Hey, we're going to be making some announcements that really help oil prices." So far, the announcements have not been that strong. What they have said is that India is now allowed to buy Russian oil for a month, which I don't know if that's so great, but that's a way to get oil prices potentially down a little bit, open up some of the Russian oil. And then the second piece is that they have not been looking at the SPR, the Strategic Petroleum Reserve, yet because it's still only 60% full, because it didn't get refilled after we emptied it after Putin's price hike. So we don't have a ton of bullets in the chamber, and we're already kind of we're relying on Ukrainian anti-drone technology, which makes some sense considering that Ukraine's been fighting Iranian drones for the last 4 years. But there are just some elements of this war that seem less strong than the Venezuelan operation or the first Iran operation.
Yeah.
And I'd like...
It seems rushed. It seems poorly thought out.
So that's
I've heard that before.
There's definitely a significant impact that's having on markets, but I think right now the story of the day is going to be how does the higher oil prices marry with the fact that we just lost 90,000 jobs and we basically created 0 jobs last year in the U.S. economy.
It should be rate cuts.
It should be rate cuts, but I think with the oil price thing, I don't think there's no way Powell's going to play ball on that.
No, because he's so independent.
And I think they're going to love that.
Yeah.
I actually think there's a constituents, and I don't like saying like how people are going to feel, but I do think there's going to be some element of satisfaction. You can see it in the interviews like with Kashkari or even Waller. And I would imagine Powell as well, who's like, oh, no, we hate it. But secretly they're saying this actually.
Yeah, this gives us.
Yeah. This gives us the out, and it's on them, and we're going to be the guys who are right, and they're going to be the guys who are wrong, and we're just going to watch it.
Yeah.
We're going to watch them blow themselves up.
Yeah, Jay Powell is going to be vigorously riding his bicycle around the ever-growing homeless population in D.C., and just feeling so good about himself because he's just a bastion of freedom in this country.
Next week, we have the NFIB Small Business Optimism Survey. That's expected to tick up. I wouldn't be surprised to see that tick down because of the war. We do have Oracle earnings. I wouldn't be surprised to see job cut announcements announced alongside that. And then we have the CPI on Wednesday, Consumer Price Inflation Report. That's going to be a big one. We have a couple bond auctions, 10-year and 30-year auction. It's going to be a big week for bonds, Tom. We do have Lennar reporting earnings, but I think bonds are going to be the focus of the week with the CPI as well as the 10-year and 30-year bond auctions. Fed's in a blackout window because their next Fed meeting is the following week.
I mean, yeah, bonds continue to outperform stocks. You heard it here first. Well, I guess you heard it at our macro that we thought bonds could potentially outperform stocks. Stocks down, 9 basis points or something for the year, basically flat. Bonds up, call it 1.5, depending on the market. But yeah, it's going to be an interesting week. Do we want to talk about Mark Wayne?
You can. I don't have too much. Other than I think it is notable that
he's got a sweet name.
He has a great name and very interesting former career. But then also he's a little bit more aligned with, he's not a Democrat, but Democrats like him.
Yeah, it sounds made up. If anybody ever watched the show Unbreakable Kimmy Schmidt, which is like a Tina Fey straight to Netflix series, John Hamm played a character, Reverend Richard Wayne, Gary Wayne, which sounded made up, but then now we have Mark Wayne in charge of the Department of Homeland Security. So.
He has said, I'm not Rambo, but ...
He's he's a character. So we'll see how that turns out. I mean, it's tough because you think who would be the best person to deport a bunch of illegal immigrants? The woman who's most famous for shooting her own dog. It seems like a good option, but it turned out not to work out so well. So on to the MMA fighter. So big week. What a week it's been.
I'm ready for the weekend.
Yeah. Let's see what happens over the weekend. Last weekend threw a spanner. Is that the word in the wheel? There's been a lot of potential spanners this weekend, so we'll see how it goes.
All right. We'll see you next Monday. Bye.